U.S. stocks finished lower on Friday and for the week, ending a several weeks-long rally for the S&P 500 and Nasdaq. Federal Reserve Chair Jerome Powell contributed to the declines by telling Congress earlier in the week the central bank will likely keep raising interest rates. And San Francisco Fed President Mary Daly told Reuters in an interview Friday that 2 more rate hikes this year is a very reasonable projection. The Dow closed down 0.2%. The S&P 500 dropped nearly 0.8%, and the Nasdaq gave back 1%. Contigo Director of Applied Research Melissa Brown advises investors to remain cautious in these market conditions.
I think it still suggests that caution is probably a good way to go. That caution could be in just buying more defensive kinds of stocks. That caution could be in actually looking to the bond market where yields are higher. I mean, they've been high for a year now, but it's much higher than they were for many years before that. So bonds seem to be a reasonable alternative to stocks. But if you want to stay in the stock market, and I should point out that I am definitely an advocate of staying in the stock market, it's just too difficult to time it. But so if you want to stay in, though, it might be better to be looking at some of the more defensive names.
Stocks on the move Friday included Starbucks, which fell 2.5% after its union said around 3,500 U.S. workers will strike next week to protest the chain's ban on Pride Month decorations at its cafes. And shares of CarMax surged 10% after the used car marketplace posted better than expected quarterly profits.